Well, good morning, everyone. Welcome to our Thursday morning trading session. Hopefully, it will be a little bit more active than Wednesday's session was. My goodness, Wednesday had that quick rally right out of the gate and then nothing. The market just floundered for the rest of the session. So we just had the opening bell, and I'll admit I'm a little bit anxious about getting onto something out of the open just because the way the markets have been. All right, we'll take a shot here at this signal that we're getting. Oops, stop that. On our Raptor, it wasn't quite the setup I was hoping for. And you can see by the time I got over here, I got the signal a little bit late. And this is definitely a type of signal where you're just kind of hoping for the best. What it was we've got a double pullback into the hard edge. See, a quick little double pullback. We came out with a signal. And we're just looking to see now whether or not we can get any follow through on that. Okay, we'll put that back on the shelf. That's the only one I'm going to take a stab at until things start to settle in a little bit. Well, come on, sellers. You showed up before. Usually what I like to do is I usually don't touch the market for at least the first 15 minutes, half an hour even. But like I said, it seems that recently anyways, if you don't get in on the first move of the day, there is no more move, except for maybe the odd scalp here and there. Nope, it's not going to work this morning. So I've gone with the swing high-low strategy just to give myself a little bit of a chance on this. It's one of the more fundamentally sound stop strategies because it actually relies on price action. All right, so they're not wanting to head lower. Let's see if they want to head any higher, but I'm definitely going to wait them out this time. It's only the first 5 or 6 minutes of the session. Oh, sure, now they head lower. Not nice. I'm just snooping around a little bit, seeing what's going on, if there's anything worth taking a look at. Okay, so far the only one that's looking halfway's serious is soybean market. So let's bring soybeans over here. And we have a market that's obviously in decline. We had a trend change signal here, well, about an hour before the North American Open. A little bit of a decent decline lower. Now we're back into this trend line touch scenario. We'll see whether or not we can generate a signal out of that. The problem we're having, well, besides the obvious, with the NASDAQ right now is this insane range that we're trading within. You could bracket the range like this and like this. See, that's where we're stuck. So we got a green bar sell. The more immediate range we're struggling with is this one right here. Normally, if a market can't find a reason to go up, it will go down. So a lot of times I feel more confident selling than I do buying. Just because, and that's obviously not to say the market can't go up, but if the market doesn't have a reason to go up, if it can't find any pertinent report or fundamental information or something like that to spark the market higher, it will usually end up going lower. And you can see it was most unfortunate here with our Raptor trade, fortunate or unfortunate, however you want to take a look at it. Sold here, and the market moved a little bit fast. I ended up selling a little bit late, but what I wanted to sell was right here. I covered the trade here above that swing high. And you can see that there was some resistance associated with that. There was some support here. So I thought it was a decent level to cover above. Unfortunately, it was just a couple of ticks too light, and the trade would have worked out. So for me as a trader, I find this the most annoying scenario, where you're right about a trade, but you're wrong because your stop was too tight. So in hindsight, excuse me here, I'm going to sneeze in a second. Sorry about that. So in hindsight, even though this immediate swing looked like it was a decent place to put the stop, I should have been shooting for this one here. Now these big stops, until you understand the logic behind them, these big stops don't seem to make sense intuitively, right? We're looking for a profit somewhere, I don't know, it was somewhere down here somewhere, I think. It's a very lopsided looking trade, isn't it? But we know the market rarely makes a straight line in one direction. There's always a pullback somewhere along the way. Sometimes they're more substantial, sometimes they're just little, but there's usually a pullback somewhere. The important thing I find is to give yourself a chance to ride out the swing. Then once we know where the market has recommitted to the trend, then we can start rolling our stops. Now, this one, obviously, much easier to do in hindsight. In real time, the market did try to fake us out right here. It tried to fake out a lot of stops. A lot of people who were keeping their stops back tried to fake them out right here to bring in their stops because it looked as though the market had recommitted, when in fact it had not. So it looks like our immediate trading range has expanded just a little bit. The market kind of testing the upper end and lower end. And we're trading right in the middle of the bigger mess. Yeah, Curtis makes a point here, and I think it's a good one. He says the stop is where you're proven wrong, not the amount you're willing to lose. And I think that's true. You need to think of your stop as a safety net. You know, if you're really, really wrong about this trade, where are you going to put your safety net so that you don't blow yourself up? Crude oil, let's take a look at crude oil this morning. A little bit of a bear flag type thing happening, I think. And by a bear flag, I mean this type of scenario where we get the pullback against the trend. You see, this here was a little bear flag. And it's usually something that precedes the continuation of the trend. So we're into the hard edge of the trading band. If I shoot a trend line across the tops here, where does that fall? Yeah, that's not exactly helpful at the moment. But we're coming into the hard edge here. I would take a look at the support on the lows. Looks like we're getting a little bit of a sideways channel like this. So currently we're against the ATR. If we get a green bar sell producing a signal here, I'm going to need for it to turn over the ATR, which is probably going to bring it somewhere near the bottom of this little itty bitty channel. So right now it looks as though maybe we're going to be better off selling outside of this channel. Than getting on board too early. But we'll leave that alone for the moment. I've mentioned this before, but for those of you who didn't catch it the first time, When you have a market which is obviously range bound, as we have here with the NASDAQ, you can take a look at your hawk. It's very obvious, lots of yellow bars. Yesterday was actually a pretty decent session on the hawk. We did get some opportunities, not major follow through anywhere, but certainly enough to reach a few scalp targets. But this morning, for instance, we're looking at the bottom end of the trading range and the top end of the trading range. And really the smart thing to do is just let it get outside of this range. So what? So we're not the first one on the trade. Right? We want to let it get outside of the range, retest the range, show us that it can stay outside, and then head lower. Or conversely to the upside, get outside the range, retest it, show us you can go higher. Anything else within this range is going to be a little bit of a problem. Oh, way to go, Mark. I should put the YM up here also. Mark says he just picked up 30 ticks on the YM Falcon. Well, here's the Raptor. Oops. Yeah, here's the Raptor on the YM. So it would have been this signal here that Mark took. Well done. Yeah, the YM is certainly having better follow through than the NASDAQ of late, which has been all over the map. Good for you, Mark. Good trade. I guess with Greece being in the news so much yet again, somebody took it upon themselves to do a little parody on Greece, as well as the movie, the movie Grease. And so I've just put that in your window, that YouTube link. If there's not much going on in the markets, we might as well watch YouTube, right? But it looked like it was pretty clever. Just doing a little maintenance. Soybeans getting a little bit more tempting on the sell, on the eagle here. I'm going to bring this over here in just a second for you. So we're generating a soft edge sell signal. We're against the ATR, and that's because the falcon on soybeans is looking a little bit more bullish. We're getting a little bit of a trend change signal here. So some conflicting information in the soybean market. This trend line touch should have produced a sell signal, but you see all these double dots that we're getting down here? This was actually an early buy signal. An early trend change signal, but we're getting the bigger trend change signal developing right now also. So we'll see. Maybe soybeans, I thought for sure soybeans were poised to head lower, but maybe not. All right, yet another double pullback on the Raptor. See, we're into the hard edge, pullback, pullback, very little follow through. The good news is that we do have these recent, or this recent bar to play off of. So we know the limit of this bar right now. This is really like throwing a dart on this one, right? There's not a lot of structure to this trade at the moment. I'm going to go with the swing strategy again to start. In fact, I may put it above this one here, just to start. Okay, come on, guys. If we see them break this 46.12 area, there's a pretty good chance that, well, we should at least recover to here. Come on. The Geiger counter is loading up a little bit to the sell side. A few more sell orders coming in, but so far still just a very, very sideways market. Even our Falcon is starting to show us that. Look at how our filter is breaking up, how our trend line keeps waffling. Just very little participation. Wow, I cannot believe that they would not take out this low right here. When I set up this trade, I considered offering up a couple of ticks and taking it just below that low. They hit it right on the number and then stalled. I cannot believe that. You guys can hear that, can you? Mark asks, are you trading in the jungle this morning? A lot of birds over there. I know, I filled up the bird feeder, and I don't know what kind of birds those are, but they're out and about. And we live next to a very wooded area, so lots of crows out there this morning. And I hear my next door neighbor is doing something with his car. So yeah, it's a busy morning here in the jungle. So this type of activity that you see here, this is known as stop hunting, where the market just manages to breach previous highs and lows and then swings the other way. They're just looking to entice breakout buyers. So everybody sees that little area of resistance and they say, I'll buy it. And so then they throw in their buy order here. The market brings them in and then starts to reverse and is looking to stop them out. I'm just busying myself drawing on the charts. It's actually a pretty good channel. We'll see if it sticks to that. You can see even our trade forecaster is flip-flopping all over the place. We were in trend and said 5-minute trend, which I don't know why I would even bother. And then now we're in swing mode for about 14, 15 minutes. Then we're into scalp mode. So even from a historical point of view, not a fun time when the market is trading this way. So thank goodness Mark asked a question here, because otherwise we would have nothing to do. Mark asks, so speaking of stop hunting, what would be the best way to bracket that range in your opinion? Well, the best thing, without a doubt, is to let it break out. Look for the retest. Alternatively, we're always afraid of missing moves. Some people are going to be seeing this as a type of a wedge. In which case, the principle remains the same. Whenever you're in doubt, look for that retest. And vice versa to the upside. The tricky part here, as I've already pointed out, is where do you place your stop? Like to the upside, really the best place to put your stop is way down here. And a short, the best place to put your stop is way up here. That's a lot of real estate. But one of my favorite trading quotes, which I tend to ignore from time to my hurt, is I would rather be out of a trade wishing I was in than in a trade wishing I was out. But the markets are like this across the board. It's, the other thing you can do when the markets are like this is just to go into sim, because it allows you to try a few things, play your little what if game. What if I did this? You can see how it works out. Yeah, you've got a good eye, Mark. Mark says that's what I was seeing too, but the stops look so wide. It's impossible. You see, like here is this Raptor trade. All these yellow bars. Like it's obvious the market is sideways, right? And I'm just taking the trade for something to watch. This is not a trade I would do with real money. Unfortunately, when the markets are like this, you really have to try to exercise some patience. The trade I would have tried with real money would have been this one out of the gate. That one's on me. I take responsibility for that one. It was unfortunate, but I felt it was worth the gamble because the way the markets are behaving of late, where we get all the initial flood of orders hitting the floor out of the gate, the market actually makes a move one way direction or the other, and then flounders. So I thought, okay, if I'm going to take a trade, let's do it out of the open, and it almost worked. This second trade, the second double pullback signal, no. Once the market, we had an obvious range with no follow through, then it's time to leave it alone. Let somebody else mess around with it. Because really that's what's happening now, is it's a cat and mouse game, and you don't want to be the mouse. So they've poked higher twice now through this resistance. So we had a little swing high, they poked above it here. We have another little swing high, they poked above it here. You can see our little trade indicator around that's around our bars is actually suggesting there's some selling pressure coming into the market. We'll see. I suspect if it fails here, they're going to try to do the same thing to the downside. They're going to try to hit the stop here, maybe even hit the stop here. The trading volume is just so light. And I don't know why it is. Like, you can blame some of it on summer, that's true. But traders still need to trade, but stocks still need to solicit money, they still need to print earnings, earning reports, and so on and so forth. They still need to do their dividends. But I'm looking, even a market like crude oil, which is normally an insanely liquid market, no pun intended, is dried up. There's nothing going on in crude. Well, I'll snoop around some more, see what else we can find. Here's the British pound. A little bit of a tear to the downside. Working on a green bar sell. Now we haven't really had a test of the extreme down here, so a reversal might be premature. This may be more of a continuation type signal. We'll see if they're able to close this a little bit lower. Or not. Nope, not yet. All right, so we'll come back to the British pound later. Maybe the wheat market. We haven't looked at the wheat market for a little while. And not much going on in wheat either. We're getting a possible trend change signal. All right, well, nothing just yet, but that's kind of how wheat is shaping up. Okay, here's crude oil. And let me change this line so I can see where. Natural gas inventory coming up in about 10 minutes time. Thanks, Josh. Oh, is that, that might be a little early. I think natural gas inventory is not until the top of the hour. I'll have to double check that. Lance is asking about the support and resistance suite special that I mentioned in the trading room yesterday. Yes, Adam is going to be sending everybody an email with the particulars. I do believe the release for this special is next Wednesday, so you don't have too much longer to wait. Let's see how we're doing on our trading range here. Okay, we're back to the top end of the trading range. Here was the bottom end. Oh, they did get outside of the trading range. All right, let's see if they can stay outside now. We might actually get something tradable. Oops. Stop that. right, we'll set that aside. Okay, here's crude oil inching closer. So we've actually printed the signal already. The problem I'm having with this trade is that we're against the ATR. I think I'm going to let it do one of these. See how this formed over here? I let it trip the signal and show me where it's going to swing. Now, there's a danger with this in that the market may not swing. It may just continue to plod lower. But given that we're in this little bit of a sideways trading range, it might be prudent to see how it's going to react as it gets a little bit closer to this trend line. Oh, natural gas is 9:30 Central. I don't know why I had it in my mind it was at 10 o'clock. Well, let's get a natural gas chart up here. We've got a few minutes. I think August is still the front month for natural gas, is it not? Now, if you want to see a crazy market, if you think crude oil is crazy, crude oil's got nothing on natural gas. So here's, excuse me, natural gas. Looks like maybe I need to go with the alternate settings. Well, that's all right. It'll do for our purposes today. Unfortunately, it doesn't have a tight little trading range like we would normally see. Okay, we've got about 5 minutes until we get the release. So we'll come back to that in a couple minutes. You can see the hawk did give us a couple of signals here. Our first micro macro cross, quite honestly, when it was building, well, I suppose you could have taken it. It was the first micro macro cross signal. I would have considered dialing down the risk amount, or maybe just putting a onesie on it. You'd have to cover it something like that. When I do a onesie, I usually double the profit objective. I usually try to get $100 out of it. And in this case, you would have done it. Oops. In this case, you would have done it. I guess in hindsight, there was enough room to get a little bit of profit before we encountered the highs. But aside from that, we haven't really had any decent signal. Lance is asking, when I was looking at the natural gas chart, why is the screen split like this? These vertical lines that you see here, these are the session break lines. So this is yesterday, and this is today. So when my session breaks come so close together, you see this was the day before, this was the day before that, the days are too small. This is why very often we'll go to our alternate settings. So for most of the charts, most of the time we're going to have our 6-tick hawk, 8-tick falcon, and 12-tick eagle. But when you get bars that are forming that close together, you can go with your alternate setting, which is 4-tick hawk, 4-tick falcon, 6-tick eagle. And you can see what this does is it actually gives you some opportunities. Notice how in the previous chart, there weren't any signals that we could capitalize on. But if we go with the alternate setting, we get our early trend change signal. We get our proper trend change signal and late filter entry. There's actually trades that we're able to take advantage of. So that's why the screen was split like that. In fact, with this, we can even see a little bit of a range here and here. This is, like I say, an insane market. And this is just for fun, folks. So we're going to buy a break higher, and maybe I'll use the support and resistance lines as my entry. So I'll buy a stop up there, and I'll sell a stop down here. So I'm using the OCO function. I've got a stop enabled on my swing high low. Actually, I should go with maybe something like an ATR with a 5. Okay, that looks pretty good. All right, here's the countdown. Oh, look at how they've paused. Is that it? That can't be it. Oh, there they go. Wow, and they came right back down, hit me at break even. And if they didn't hit me at break even, they would have hit me on my trailing stop. So we're getting a little bit of a trend change signal here to the upside. Again, we have this minor range. As I've told you with crude oil, we have this option also with natural gas where you can let the market fill the report, let it do its thing, and then after the dust settles about a minute or so later, it will usually give you some sort of trading range that you can bracket. This is how a friend of mine likes to do it. He lets the report hit the floor, let them sort themselves out, and then he will bracket the range. And he's had pretty good success doing that, I suppose. Natural gas, of course, a more expensive market. Oh, come on. Get down there to that break even. A little bit of excitement in my neighborhood this week. They're filming a movie, or I guess a television series. That TV series Grace Point, I don't know if any of you have watched it at all. That's all filmed around here. And they're filming down the street. It's very interesting to watch. We usually see at least one camera crew a year come through here. More so in Victoria and Vancouver, but even in our little community of Duncan, we still see a lot of filming because, of course, we've got some historical type buildings and they can shut down Main Street. So they like those types of things. Well, they were out changing all the street signage yesterday for the shoot, which was kind of fun to watch. And the equipment they use, my goodness, it's elaborate. All right, so the trade looks like it's making some progress now. Oh, don't you dare tag me at break even. Lance is asking, so the OCO feature is not available on the Raptor. No, it's not. And the reason for that is because the Raptor, you need to enter your orders by right-clicking anyhow. So you do the OCO, but you do it a little bit differently. So you could, bracket the high, bracket the low, and once the order fills, here, we'll do it like this. We'll bracket this range. Once the order fills, you have to manually remove the other trade. But if it's like most OCOs, it's not that much of a danger. If anything, the other side of the trade is going to act as your sell stop or your exit order anyhow, right? So it's not usually that much of a problem. The big feature on the Raptor is the one-click entry, and the market's not even cooperating here, so I can show you that. But that's what you would do, is you would, if it filled on the one side, your other side would probably become your stop, or you just cancel it manually. Well, we'll watch the natural gas trade here a little bit because there's not much else going on. This bar right here would have been a good one to roll my stop above, because you're seeing the sellers force the market lower, the buyers starting to toe the line, and then the sellers try to press the market lower again, and it would have been a good spot to get out. What I'm going to do is we're going to look at the bar high low here in a second. So this swing also very good. Good spot to say uncle. If the market reverses here, you can see we're getting a little bit of a trend change signal to the upside. But if not, we will follow it lower. Natural gas can actually be a pretty good day trading market because there's, aside from the inventory report today, you can see there's some decent moves going on here. But like crude oil, it can be a little bit on the expensive side to trade. Let's see if I were taking this signal right here. If I covered, could I cover it down here? Oh, actually, it's a little bit more affordable than natural gas. Or, pardon me, than crude. I might have to start looking at natural gas a little bit more often. See if we could even cover that intermediate swing right there. All right, that's what we'll do. Tomorrow I'll put natural gas into the mix. Oh, I guess we might as well watch this. Oh boy, it's trying, but it's really having a hard time. If this were a fast moving market or a market with a lot more follow through, I would consider a 1-bar pullback a retest, and then if we came back with a buy signal, I would be interested in buying, but it's been so slow. I would much rather see something like this, where we go up a few bars, come down a few bars, come back, okay, now you produce a signal. Now, admittedly, this signal did not have much follow through, but we were kind of working off of this area at the time. Right, so here was the resistance area, the market breaks up, comes back down, retests, produces a signal. This is a good example of why I like to use the ATR line. So here's the bar now that changes the ATR line over, or would have, and that's where we would have entered our signal. Above this actually now becomes our signal bar. So we would have been able to avoid that little bit of a reversal by following the ATR as a filter. But the concept holds, right? That was what we want a retest to look like. In fact, that's almost textbook. So this is where we are now. Breaks out, comes down, it's trying to press higher. Fortunately, we don't have a signal on the Eagle, otherwise I'd have to make a decision. We are getting a signal here on the Falcon. It is a trend line touch. It's not giving me a warm, fuzzy feeling, but All right, it seems to be retracing a little bit. Anyhow, before I go put the second push on that, Josh is saying that his Eagle does not have the ATR line on it. How do I enable that? Well, let me show you. So you go to your indicator panel, and on your indicator panel, you're going to, when you scroll down here to your indicators which say IW, you're going to find one that says IW TM ATR trail. Double click on that and it's going to appear down here. And really all this is the programming your trade manager needs to function. But if you apply it to your chart, you're going to get this little red and blue squiggly line. Now this was an add-on from Mike Filigera, and I find that it helps, which is why I've started using it. So ideally we want our signals to be in sync. In fact, I'll tell you, Mike is even more aggressive with it than I am. I'm not usually that much of an aggressive trader, but I'll show you how Mike will use it. Mike will take signals which are in sync with the ATR. So here, even though our band has not turned over yet, we're printing a buy signal. It's in sync with the ATR. Mike would be all over that. He would be all over buying that. The stop is probably down there. And you can see it would have worked out to be a nice little trade. Here too, this red bar buy, it's in sync with the ATR. Mike would have been all over buying that one. And there too, it went higher. And Mike Filigera is no slouch of a trader, folks. I've been using it more just as a filter. See, like here on this green bar sell. But here too, you know, this signal was in sync. It always seems to work better for the first signal. And it doesn't work all the time, in case you're getting all excited here thinking that you've discovered something new. Here's a signal. Oh no, that wasn't one. Here's a signal which is in sync, right? It's in sync with the ATR. It's against the band, but it did not have very much follow through. But here's another signal right here, in sync with the band, good follow through. In sync with the band, good follow through. And by the band, sorry, in sync with the ATR, against the band. Yeah, the way things have been, maybe I'm going to need to become a little bit more aggressive with the signals we're getting. So, Trade Forecaster just blurted out here that we've got 3 hours of trend ahead of us. Oh, well done, Marlene. Marlene says she just did that with gold. Took a similar signal to that with gold. Way to go. All right, I guess we are getting a little bit more of a retest now. So these lines here are highlighting essentially the high and the low, which is this morning's range, broke out, retesting. We'll see whether they come back here now with a buy signal or whether they're just going to keep going sideways. Josh is asking, is the ATR only applicable to the Eagle? Well, listen, folks, you can put whatever you want on your charts. The criteria is, does it help you make a decision? That is the number one criteria. Even more important than, does it help you make money? What, you say? Yes, it's true. Because I'll tell you right now, the system you have in front of you is as powerful a system as you will find anywhere. However, I always get people who want to add more. So go ahead. If, I worked with one guy who loves stochastics, and he said, can I put stochastics on? Sure, go ahead. If having stochastics here helps you make a decision, then by all means, put stochastics on. If stochastics don't help you make a decision, get rid of it. Because what ends up happening is you end up putting so much on your chart trying to filter out the bad signals that soon you won't be able to make a decision because you've got so much stuff on your chart. I'm going to build you a chart of a fellow who I did some mentoring with. And it actually looks a little bit calm by comparison to some. But this was his chart. Now it's not so bad. He was looking at different moving averages and trying to use those to generate buy and sell signals. And he was a fantastic trader in hindsight. Incredible trader. But of course, that doesn't do anyone any good, does it? In hindsight, he would tell me, oh yes, I would have bought it right here, when this black line crossed over the brown and all the lines were in sync. I would have bought that. Okay, well, what about now? The black line is crossed over, your other lines are in sync. Are you going to sell it? That's what I would get from him, right? So your assortment of indicators don't really matter. If you want to put the ATR line on your hawk, go ahead. If you think it's going to help you make a decision. Oh, and by the way, you don't just have ATR. You can do chandelier, you can do super trend. Mike did ATR because that's what Mike Filigera is used to. He's used to plotting the average true range, and it's a figure that's significant to him. Okay, so here's the ATR on here. Does this help you make a decision? Are you going to, take this first micro macro cross because it's in sync with the ATR. Does it make you feel better because it's in sync with the ATR? Then by all means, leave it on. None of these other signals mesh with signals that we're looking for. And here we might have to go back a day or two, but here's a first micro macro cross which is against the ATR. Are you going to avoid that first micro macro cross because it's against the ATR? Are you going to let it flip the ATR over like I do with the Eagle and then commit to it? But I would hate for you to avoid it because of the ATR, because it's a first micro macro cross signal, right? We know it has good probability of success, and this one did too. It had very good follow through. Here's a macro pullback signal. Almost all macro pullback signals will be against your ATR. It's just the nature of the beast. And there's nothing wrong with letting the market turn the ATR over, but remember, especially on your scalper, see, if we had taken it on the signal, we would be halfway to our profit objective already. But if we're using the ATR to flip the chart or to generate our signal bar, we're having to make the market move that much harder. So rather than being halfway to our profit objective, we haven't even entered the trade yet, right? There is this trade-off that you have all the time. The further you make the market move before you take a signal, the more strength you're looking for the market to produce, or more strength the market to have in order to reach your profit objective. So sometimes it's worth taking the signal early. If you're not feeling good about the setup, dial down the risk. Leave yourself as big a stop as you can manage. And if the trade works, great. If it doesn't, well, at least you didn't lose more than you could afford, right? If you're only losing 1 or 2% of your account, you're probably doing okay. But yeah, to answer your question, Josh, the only one that I've added it to was the Eagle, because I did find it helped me filter some of the signals, like this signal right here, right? It would have been a hard edge bounce, it would have been a sell signal, but by monitoring the ATR, this one I would have actually stayed outside of the trade until it got through that ATR, which it never did. And I suppose I could have got a little bit more aggressive on it. I'm going to do that the next time. I'm going to be a little bit more aggressive on my Eagle signal. James is asking, are all the indicator warehouse indicators available at the website? Yes, they are. Some are free, some are paid for. The things like the ATR would be part of your Trade Manager or Trailblazer package. So they would be already part of that programming. You can also, if you don't want to add an ATR line, you can mimic it by using your ATR stops and dialing it down to a 2.0. That will give you the same kind of look as your ATR line without the squiggly crossover. So some people like to trade in sync with the ATR. Again, there's nothing that's foolproof. I'll save you a lot of time right now. You will never find the signal that is correct 100% of the time. What you need to do for better or worse, well, number one, you need to be able to make a decision, right? You need to be able to look at a chart and say, yes, this is a buy signal. No, this is not a buy signal. Right? That's the number one thing you need to do. This is not a buy signal for me. I want to see the double pullback. And then come out with a buy signal. That I'll consider buying. That would be for the Raptor. That's not to say I'm not going to get a buy signal on one of my other tools. So the number one thing you need to do is you need to be able to make a decision. And sometimes cluttering your chart with a bunch of indicators prevents you from doing exactly that. Ho hum. We're actually trading within the larger trading range from yesterday. So here was yesterday's low, and here was yesterday's high, I think. From the session itself, not the overnight. And you can see we're still kind of stuck within that bigger range. Unfortunately, you will never know with 100% confidence whether your signal is going to work out or not. That's why we use the trade manager to try to protect ourselves. Right? We try to limit our risk exposure. Boy, oh boy, what a dismal session. Just nothing. We'll hang with it for a few more minutes, but it's really starting to look like another sideways day. You also want to, always keep your market in context. When you're looking at a signal, if there's an obvious trend, if there's no obvious trend, these are all things that you want to keep in mind when you're looking at taking a trade. People are always writing me with a question like this. Did that work? No. Okay, well, it's not the prime example, but let's say instead of having a green or a red signal here, it actually generated a buy signal. And people are always writing me asking, Eric, why did this buy signal fail? What did I do wrong? It was a trend change signal. It went down and went up. Oops, sorry. It went up and went down and went up, generated a buy signal. Why did that not work? Well, because you didn't take the context of the chart into account. You didn't take into account that you already were in an uptrend. You didn't take into account that maybe you were retesting the breakout. Well, actually, you did take into account you were retesting the breakout. Sorry, my mistake. Bad example. But I hope you guys get what I'm trying to say. Oh my gosh. My brain is fried from all this inactivity. Not the best example, Eric. Well, it's looking a little bit more like a proper retest now. So here was the breakout. Here's the retest. They're actually working on another buy signal. Look at them go. I think we got one here in the Falcon. No, not yet. We did get one here in the Raptor. But I was waiting for that double pullback. And now we have one here on the Eagle. Well, now here too, you can let the signal, there's some sort of characteristic about the Eagle. I don't know why it does this, but very often when it engages a signal, it will show you a reversal bar, right? So whether it goes higher or lower, it doesn't matter. It seems like it'll go up, engage the signal, come down, and then gather itself and continue higher. Here's an example right here. Here, let's get this out of the way. So generates a signal, engages the signal, then produces a reversal bar. You can wait for those if you want. There's nothing wrong with waiting for those, especially the way the market's been behaving of late. It might be the smart thing to do. We can get a second push on this entry, which is probably good enough. In fact, I'm going to do one better. I'm going to just throw a onesie on this. We're near the highs. We're near the high of the trading range from yesterday. Tony says, I think I'm going to go get a root canal just for something to do. It might be a little less painful. Oh my gosh. All right, so no follow through there now. Ay, 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 ay. All right, you guys, I'm going to shut the room down. If you're going to try to stay with it this afternoon, well, you know what? The short-term trend is up, so why not try to be a buyer? I don't know if we're going to see any follow-through or anything, but um, what can I say? Another painfully slow day trading in the summertime. Hopefully Friday will be better. If nothing else, it'll be better just because it's Friday. I'll see you guys then. Bye for now.